Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, September the 8th. Wanted to take just a brief minute to discuss where markets finished up the week last week and discuss where we see markets moving forward this week and what's really driving a lot of the market action that we're seeing. So last week was another down week in the equity markets as the markets continued to digest the hawkish comments or the aggressive comments, meaning that Fed Chair Powell is going to do whatever it took to fight inflation, and that is deemed hawkish in our verbiage. And the markets have been selling off ever since then, with the S&P 500 finishing the week last week down 2.8%. The mid-cap index, as measured by the S&P 400, was down 3.8%, and the small caps, as measured by the S&P 600, were down 4.5%. Now we know, and we've just been treading water here in the market since Fed Chair Powell's comments at the Jackson Hole conference, and the economic data that we've gotten in over the last 2 weeks, whether it's continuing claims, whether it's job openings, whether it's the jobs report itself, which was great last Friday. This week it was the ISM service number, which is the index that measures how much demand is out there for service sector economy, which is 70% of our economy, and that came in higher than expectations. So we're still in this phase where good economic data is bad news for the stock market, because that means that the Fed is going to continue to be aggressive longer, potentially. Now, yesterday you had Fed Vice Chair Brainerd out on her comments out saying that we want to be aggressive on the front end to pause, and that really caused yields to come down a little bit yesterday. The dollar came down, and you saw a nice rally in the equity markets, snapping a 7-day losing streak. But I wanted to just take a second here and just pare back and think big picture here and help you out as you're navigating through this. So we had a run down to the June lows this year and down to June, and after the June lows we've had a significant rally higher off of those lows and a retracement off of those lows. And investing is not a straight line, and it comes and it ebbs and it flows. So we've had a really nice rally off of the June lows, so it shouldn't be any surprise here that we have some semblance of a pullback. And pullbacks and adjustments are necessary behaviors for equity markets, and it allows us to become more efficient as investors and allows businesses to become more efficient as well as they weed out waste and inefficient processes. Just think back to a year ago. What was hot in the stock market was companies that saw endless growth, had zero earnings to show for it, were trading not at price to earnings multiples, but were trading at price to sales multiples. Growth at any price was what was in style, and that's what investors were bidding up. Well, we transitioned to an area of rising interest rate environments, and investors realize there is a cost to that growth, and that you do need to show that you are capable of providing earnings and returning capital back to shareholders. And so that was a huge shift in the equity markets. And so you've really seen sectors like utilities, industrial machinery outperform what has been the popular categories for the past decade plus. So when you're thinking about investing, is you need to be able to pick a strategy, and finding companies that grow at reasonable prices, have profitability, and have some semblance of a moat have been proven to be successful no matter what the investing climate is. And that's what we work hard to do here at River Place, is identify those equities and those businesses that have all of those characteristics around it. So if you build a portfolio that way, you can weather these times, and understanding that investing is not a straight line up or a straight line down. It ebbs and it flows. So if you have questions about how to navigate that or how to position your individual portfolio as we're going through this volatility, feel free to reach out and give us a call. We're easy to talk to. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. Have a wonderful rest of your week, everyone. Thank you.